Double-entry bookkeeping in accounting states that every transaction should have a receiver and a giver. The receiver is termed the debit side, while the giver is the credit side. The debit side is the left side, while the credit is the right-hand side. Follow us for more.
Elementary accounting says debit the receiver and credit the giver. What do you think about that? Hey everyone, welcome back to the channel. Today we are going to talk about one of the most important concepts in accounting, double entry bookkeeping. So let's break it down.
Welcome to Accounting Media with Ian Obaka.
In simple terms, double entry bookkeeping means that every transaction has two sides, a debit and a credit. It's like a balance for every action. There is an equal and opposite reaction. Let's say you buy a new laptop for your business. You sold $1,000 in cash. Here's what happens. Your cash decreases by $1,000, and that's the credit side. But on the debit side, you now have a new asset, the laptop worth $1,000. See how both sides balance out. That's the core of double entry bookkeeping, ensuring that the books are always in balance. Double entry bookkeeping also ensures that the basic accounting equation stays true. Assets equal to liabilities plus equity. Every time you record a transaction, it affects at least two of these accounts. So why is this method so important? Well, it helps catch errors, provides a clear audit trail, and gives you a true picture of your financial health. To wrap it up, double entry bookkeeping is the foundation of modern accounting. Every transaction impacts two accounts, ensuring balance and accuracy. If you want to keep your financial records on point, this method is a must. Hope that helped. Don't forget to like, subscribe, and comment if you have any question. See you in the next one.